Hey there, we're going to talk a little taxes today. If you're self-employed and you're wondering about filing quarterly taxes, if you have to, how do you do it? We're going to cover all that today. Get the pen and paper out. First of all, I would like to say that I am not a CPA, a EA, or a tax attorney, but I do play one on TV. I'm just joking. But in all seriousness, those are the three individuals that can represent you in front of the IRS if you were to get audited. So I just want to put that out there because if you're going to use any of these strategies and you're going to be a do-it-yourselfer, I think you need to really consider the fact of advice. You know, this is an advice channel. I'm giving you advice, and some of it you can use and implement right away. Some of it you may want to run by an attorney or a CPA or an EA because those are the people, like I said, that can represent you if the IRS was to come look at your books and you can't tell them, hey, I found this on the YouTube CFP's channel. It won't be good enough. All right, do you have to pay quarterly taxes? It really depends is the answer. The first thing is there's going to be quarterly taxes that you have to pay at the federal level and at the state level. Myself, I live in Texas, so there is no state income tax. If you have a state income tax, you do well to look on your comptroller site and make sure that you fill out all the forms accordingly because this is going to be mostly around federal taxes. Now, federal taxes, if you're looking at my particular situation, I am self-employed. My wife is not self-employed, and she gets federal withholding because she filled out a W-4. So her employer is going to be withholding from her wages to pay her federal income tax or her, for the estimated federal income liability or federal tax liability rather. So what that means is if you're a joint household like we are, where we combine our finances together and file a joint return, then what she's withholding plus what I'm making in my business and the taxes on that are all looked at in one return. So that's to say that I'm not making estimated quarterly tax payments this particular year because she's withholding enough on her job. Now, it won't always be that way, and that may not be your situation. So if you're single, you will have to make quarterly tax payments if you have a self-employed business and you don't have any other way that federal taxes are being withheld. Here's the principle. The federal government, when they tax you, they look at this concept and it's income from all sources. So as long as you're earning income, there is a taxation on that particular income. And the reason why you pay quarterly taxes is because there's nothing being withheld out of every paycheck while you're earning during the year. So the government, the way they do it is they just estimate the tax liability divided by 4, and you pay that every 3 months until we get to the tax deadline in April. Now you may ask, how do I set up quarterly taxes? Well, again, remember the scope of this is just from the federal level. So I'm just going to say, thank God that I have a tax professional. I am a financial advisor that believes in eating his own cooking, which means I have a CPA that does this for me. So what you want to do if you don't have that though, I have something for you, do-it-yourselfers, right? Now, let me give you one other caveat. If you are a self-employed person, this is almost exclusively talking to self-employed people that are taxed at the individual level or, like I said earlier, where I file a joint return with my wife. If you're taxed at an entity level, like you have an S Corp or a C Corp or a partner and you're filing a different type of return, this really is not going to apply for you because there's different rules. You're going to have to take W-2 income in most instances, and it just gets it gets real complicated. But if you're running a business out of your home, you're selling T-shirts, you're giving service advice, and you're a sole prop or an LLC, and you file as a flow-through entity at the individual level, then this is for you. All right, the very first thing you're going to do is you're going to generate a profit and loss statement. Why do you have to do that? Well, your books have got to be accurate, and you're only going to be taxed on earned income. So you want to take some time to make sure that your top line revenue minus all the expenses to run your business and create that revenue is giving you a net profit number. You're only taxed on profit. Then you're going to multiply that number by 0.9235 or 92.35%. That gives you the amount subject to self-employment tax. So just save that number off to the side, right? Then you're going to take the cap on income for Social Security taxes, which is $132,900 for 2019. Multiply that by 12.4%. That's going to give you a number. Then you're going to take the number subject to self-employment tax that I gave you in the very first part of the equation and multiply that by 2.9% for Medicare. That's going to give you a number. You're going to multiply the Social Security cap, the 12.4% times 132,900, plus the 2.9% of your self-employment, get that together, and that's the number for self-employment taxes. That's going to be what you're going to be liable for being self-employed. Now this number, and we're not going to go through all this, is going to be used in the estimated tax sheet, and you will just walk through that formula. It may take you 10 to 15 minutes. You'll need last year's tax return, and that will give you estimated taxes. If you owe, you're going to just divide that number by 4, and you're going to pay that every 3 months. There's payment vouchers and all that kind of stuff, and the website you're to go to is the irs.gov website, and you can set that up and pay that, and then you're off to the races and you're good to go. Now you may ask me, what happens, Dominique, if I miss one of those quarterly estimated payments? I don't want to give you too light of advice, and I don't want to scare you, but here's the deal. You remember earlier when I told you if you plan to owe more than $1,000, and if what you pay is the smaller of 90% of this year's tax liability or 100% of last year's tax liability, as long as your payments equal one of those two numbers, you're good to go. All right, so you may be late, and that's okay. I don't know that the IRS's system for keeping up with this, especially in light of this shutdown, is the best. What I would say is your total payments, one more time, your total payments, if you're going to owe more than $1,000, that's the first thing. If your total payments are the lesser of, the smaller of 90% of this year's tax liability, let's say that's 10 grand you're going to owe, right? And you make payments during the year of $9,000, then you're good to go, right? And if you say your payments for last year, your tax liability last year's were $10,000, and you made payments of 10 grand, you're good to go. So anywhere between that 9 and 10 grand, if it's not perfect, that's okay. But the point is that you're paying something. So, you know, it's the whole notion around, just think about when you were earning a paycheck, if you were ever employed, your federal withholding was never perfect, right? You always got a refund or you always owed. This is the same concept. So I think there's some latitude there if you miss a quarterly payment. Here's the point though. You do need to get started if you know that you're going to owe more than $1,000. Hey, hopefully that was helpful. If you liked what you heard, please leave me a thumbs up. Leave me a comment below. If you got a question, you can leave that below too. Please consider subscribing to the channel. I would love to have you a part of the community. We'll talk to you later. Bye-bye.